I'd characterise the insurance markets at the moment as very competitive. I think there's never been a time in my career where clients have had the opportunity to challenge convention, look at the ongoing efficiency of their current program structures, work with carriers, both existing and potential, to create some really exciting options. I think there's this interesting confluence between the traditional insurance markets and the capital markets, and it's providing clients with the opportunity to do some really interesting things. So I think in 2013 there were really three areas of primary concern for our clients. The first is the uncertainty over the extension of TRIPRA. The terrorism legislation is due to expire 12/31 this year, and some of our clients and prospects are already feeling the negative effects associated with that uncertainty. The second area, I think, is cyber risks. With every new event, I think we as an industry learn a little more about what's possible and, frankly, how bad it can be. So I think that's an area of both interest and opportunity for the industry. And the final area really is the negative consequences, potentially, associated with the introduction of the Affordable Care Act. The costs that will be passed on to employers, that coupled with, I think, an intense interest in reducing the cost of workers' compensation, are really those three primary concerns for our clients. The advice that I'd provide to our clients is to continue the positive trajectory that we saw so many of them develop in 2013, and that is a real preparedness to invest time on the collection of appropriate data and the completion of meaningful analytical reviews. I think it's so important to understand the way that the insurance industry thinks about a client's risk profile and how they price for their own risk capital. And I think a client's preparedness to do that is the single biggest thing that will reveal their ability to drive the price of their premiums down. The two primary areas of innovation that I'm most excited about relate to cyber risks and insurance-linked securities. Every time that there's a large cyber-related breach, we as an industry learn more about not only what can happen, but how substantial the ramifications of a breach are. And the insurance industry is responding really well to that progressive learning, not only in providing the right amount of risk capital, but a real preparedness to manuscript contracts to better meet the needs of our large and sophisticated clients. The second area, insurance-linked securities, really relates to the reality that in 2013, we issued more catastrophe bonds as an industry than at any time in history. Our large clients are really evidencing an increasing interest in seeing that confluence between the traditional insurance market and the capital markets as a credible alternative to the way that they've been doing things in the past. We expect a continuation of that trend, and that we're very excited to be a large part of what we think is a very positive dynamic.